Hey guys, welcome back to Dhruv Exchange YouTube channel. So in today's video we are going to understand breaker pattern. So without wasting time, let's get started. Hey guys, welcome back. So in today's video I will teach you an entry pattern which is called breaker. You will be able to see these breakers a lots of places, like for example whenever their price goes into the liquidity pool, so over there you can see this breaker pattern in smaller time frame. So for example it's like this type of higher time frame level, okay, and you will be able to see a breaker pattern over here in the smaller time frame. So this is a 1-inch time frame gap, okay, and then this, if you go in 5-minute time frame like this, you will be able to see a breaker pattern. So what is the breaker pattern? Okay, look it over here closely. Breaker pattern is an entry setup, like same as like a fair value gap, order block, or optimal trade entry, okay, and this is most of the times only breaker pattern happens, okay, and there's a rare case when you will be able to see a fair value gap entry or order block, like it's 50-50, okay. So this what happens, let's see, like this was the low of the higher time frame fair value gap, okay, this was the closing of the higher time frame fair value gap. Look what happens, price goes up, then it goes down and takes the low, so it's a market structure shift right over here. And at the same time price goes one more time towards the upside and takes this swing high. So this is a market structure break. This was a market structure shift and this was a market structure break. So now price will go in some other direction. So now what will happen is this down close candle, which was close to the swing high, is our breaker. So what will happen is price will come down till this breaker candle, and then you have to take your entry right over here, and you can put your stop loss below this or you below this, okay. In breaker pattern you will get big stop losses, but the thing is it's effective and you will get into some good trades. So look over here closely how the bodies are closing inside this candle, right? So why these are closing like this, and see, like wicks can go outside because wicks are manipulated by the broker, but the thing is look at the bodies are closing inside this, okay. And why this happens? So for example, like big institutions and hedge funds, what they look into this, like they took a sell right over here, right, and they don't know, okay, that what's going on and how it's gonna work. So what will happen is price went into their opposite direction, right, and they don't use stop losses because they have lots of money to manipulate the market. So what they will do is, like they want that they have to close their trade on break even, right, because they are right now over here in a drawdown. They have taken a sell over here and the price has gone into their opposite direction right over here, okay, and now they are in a drawdown, right. So they want to close it in like no profit no loss, and so they want to close it into break even. So that's why price will come back to that entry point, okay, of their entry point right over here, and they will close their trade over here, and now there is no one in the market but only the algorithm, okay. Then what happens? Then algorithm starts pushing the market towards the upside, and then it keeps on going, bumps into the fair value gap and keeps on going towards the upside with the bias. And it happens most of the time. Like look into this scenario, first market gave a market structure shift towards the upside and then the downside, and you have to look for a big candle, not like this type of small candle because it can be messed sometimes. That's why you choose a big candle, right? So see how price struggles inside this. It made a double top over here, and then it went one more time up, took the double top high stop loss, and then goes down. And one more like this one, price gave a market structure shift first towards the upside and then towards the downside, and came back into that this breaker pattern, and then it goes towards the downside. And look into this one also. This is also the same thing. First the market structure shift to the downside and the upside. Your entry will be right over here and your stop loss will be below this. And look into this example. This is the market structure shift towards the downside and towards the upside, and this keeps on and this always happens in the market. So the main question is that where you will find these type of patterns and setups. You will find these type of setups like you marked a higher time frame fair value gap, right? Like for example this one you mark the higher time frame fair value gap. So in that higher time frame fair value gap you will be able to see these type of patterns, not take these type of patterns anywhere in between, okay. You have to mark your higher time frame levels, higher time frame fair value gap, order block, or but the things which I have taught you, right? And you have to go into smaller time frame, and you have to look for these type of setups into smaller time frames. Like for example, you did your analysis on 1h time frame, and after that you went down into 5-minute time frame, and you are just waiting in that fair value gap which you have marked on 1h time frame, and then you are waiting over there for this type of pattern. Over there only you will be able to find these type of patterns. So the knowledge, that the logic behind this, I also told you the logic also, that big institutional hedge funds will take sell from here. So that's why they don't want to close into drawdown. Okay, so that's why they will manipulate the price, they will put big lots over here. Okay, and we cannot imagine how the big lots will be. Okay, so it will come down till over here at the entry point, and then they will close all of their trades, and then the markets starts to go upside. So this is what you have to do, right? You have to go into your charts, you have to mark the higher time frame levels and or higher time frame fair value gap order block, and then on that higher time frame fair value gap or order block area, you have to go into smaller time frame, and you have to find these type of patterns like a breaker pattern into that area. Only you will be able to find these breaker patterns, because lots of my students and lots of like you people comment down that they will say like I am not able to find these type of breaker patterns in my charts or something like this. You have to find this only happens in that high time frame level or high time frame area. So you have to mark it on 1h, and then you will be able to find it on 5-minute time frame, or you will be able to find this on 1-minute time frame. So the thing is, don't try to find this anywhere. Like try to find these breakers on only on higher time frame fair value gap or something. So I hope you guys like this video. So if you guys like this video, drop a like, share it with your friends, and subscribe and turn on the post notifications, because we post high quality content right over here. And let me know in the comment section that on what topic I should make more videos on. So until next time, wish you good luck and good trading.